Focus is NALCO. The shares are surging in trade today. Nigel is here to explain what's happening here. Nigel?
Well, that's right. NALCO is outperforming in today's trading session, not just the market, but even its own metal index. A few factors have played out. One is Chinese have announced various measures this morning. There's a split verdict whether or not it was enough, so we'll keep that aside. But the bigger trigger was that Alcoa came out with its set of numbers overnight. And in aftermarket hours, the stock was up close to around 6%. A few important factors that played out here. One is the quarterly numbers were the best that we've seen in the last few years. The EPS estimates that Alcoa delivered, well, it was much better than what the street was working with out there. And the reasons they have stated for the big beat is that alumina prices were better, and they have also gone on to state that costs were lower. Now, the read-through with regard to alumina prices is very, very positive for NALCO because it's a direct beneficiary. They are selling alumina in the open market. Remember, we had the management who joined here on CNBC-TV18 itself earlier this month, and Mr. Patra said that they're expecting alumina production to ramp up from next year onwards. To give you a number, they said this year they'll do 2.1 million tons, next year 2.6, and following that will be more than 3 million tons. That's on the volume aspect. But on the pricing aspect, he was very, very positive. He said that he expects alumina prices to hold at around $600 per ton, which is much higher than what Street is estimating. And also now Alcoa is saying that the global market is going to be in a deficit. Putting this together, the direct play on higher alumina prices is NALCO, and that's why that's seeing a good amount of buying in today's session. Back to you.
Thank you very much for that. Why are you watching, sir?